Hello and welcome. Today we shall be taking a look at global consumer goods company Unilever PLC. The company has a market capital of £46.56 billion and is currently ranked 10th in the UK FTSE 100 index. In 2018, Unilever had a turnover of £44.86 billion and a profit before tax of £10.89 billion, giving it a margin of 24.3%. It currently pays an annual dividend yield of 3.42%, which is paid quarterly, November to November. This dividend is covered 1.5 times by the earnings per share. Founded in 1929 by the merger of Dutch margarine producer Margarine Unie and the British soap maker Lever Brothers, the company has dual listing in the UK and the Netherlands. The current CEO, Alan Jope, joined Unilever as a graduate trainee in 1985. From 2014, he was President of Beauty and Personal Care and appointed CEO at the beginning of January 2019. The previous CEO, Paul Polman, was appointed October 2008 and resigned in December 2018. Unilever employs around 169,000 people worldwide and has around 400 brands in more than 190 countries. Its products are used by 2.5 billion people every day. It is divided into 4 divisions. Personal care was 40% of the 2018 annual revenue. These products include Dove, Dollar Shave Club, Lux, Sunsilk, Tresemme, Signal and Vaseline. The other division, food and refreshment, accounted for 40% of the 2018 annual revenue. Its products include Knorr, Hellmann's, Walls, Magnum, Lipton's, Book Bond and Ben & Jerry's. Unilever sold its spreads business, which included Flora and I Cannot Believe It's Not Butter, in 2017. The last division, Home Care, accounted for 20% of the 2018 annual revenue. Its products include Persil, Surf, Comfort, Domestos and Sunlight. Unilever has had a consistent revenue for the previous 6 years of between £42.6 and £47.2 billion, with a profit margin ranging from 13.6% to 24.3%, giving it an average of 14.6%. The forecast for next year is £40.3 billion with a 17.3% margin. With generated earnings for the previous 6 years of between 143.4 pence and 207.7 pence per share, the dividend has always been covered by at least 1.4 times the earnings per share. The Unilever share price is considered stable, with a volatility 43% lower than the overall FTSE 100 index. Unilever's share price standard deviation for 2018 was 170, compared to 348 for the FTSE 100. The current share price is 36.6% above the 52-week intraday low. In early September, Unilever announced the proposal to simplify Unilever's parent company structure from 2 legal entities, NV and PLC, into one single holding incorporated in the Netherlands. The UK head office would close and the company would not be listed in the FTSE 100 but still be listed in the UK. As Unilever is a main constituent of FTSE 100 tracker funds, there were strong objections from shareholders. In November, Unilever decided to withdraw its proposal and CEO Paul Polman decided to retire from the company. Alan Jope was appointed to the position with effective from the 1st of January 2019. In early December, Unilever announced it was to acquire the health food drinks portfolio of GlaxoSmithKline in India, Bangladesh and 20 other predominantly Asian markets. The 2018 full-year results were announced in January 2019. Argentina resulted in a full-year underlying volume decline of minus 10%. Emerging markets grew by 4.6%, with strong growth in Asia and a standout year for ice cream in Europe. Turnover decreased 5.1%, but earnings per share increased. Alan Jope said it was a solid year for Unilever, with good volume growth and high-quality margin progression, and future market conditions to remain challenging. The markets were not impressed, and the share price was initially down 4%, but ended the day just 2% down. At the end of 2017, in a bid to concentrate on faster-growing products, Unilever sold its margarine and spreads business to US private equity firm KKR for £6 billion. The spread business was put up for sale in April 2017 after fighting off an unwanted £115 billion takeover bid from US giant Kraft Heinz. The purchase of Indian GSK health food drinks fits in well with Unilever, as there are synergies with their existing products. Horlicks is very popular in India, representing over 90% of the 2018 £500 million sales. Unilever is considered a defensive stock, with a higher than average price-earnings ratio of 19.2 compared to the FTSE 100 of 11.4, and a dividend yield of 3.42% compared to the FTSE 100 average of 4.48%. The dividend is covered 1.5 times by earnings. The 2018 annual results reported that free cash flow was down €0.4 billion to €5 billion, and net debt increased to €20.8 billion from €20.3 billion. For these reasons, I've given Unilever an overall rating of 4.7 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.